you're going to keep being adamant. You may get some success, but you're just being inefficient. So you have to know when to step back. I'm a student of the market. I'm a student of my failures. I go through my ups and downs. I make sure that I may learn from it and move on.
Welcome everybody to Traders Mind Chat, where we talk to professional traders from around the world to get into their mindsets, their head, why they think the way that they think, and how they're able to get out there, crush it the way that they do. Today I'm talking with Rizwan, again, friend of the show. Man, I just became even more impressed with him because I found out dude's under 30 and has already had this track record of success, managing 7-figure accounts, helping traders from around the world himself. It's absolutely incredible what you've done, and not like the following that you've amassed.
Yeah,
so,
I appreciate that.
Thank you.
I appreciate that for the great intro. It's been an honor, honestly. It's to get on, speak with you. I know we did an IG live the last time. It was fantastic. I enjoyed it. So for me, I figured, having one of these and having it on Zoom video call, a webinar, I think is even better. So absolutely, it's been an amazing journey. If you would have told me even as far back as 3-4 years ago that, it would be like this, the reception that I've gotten, the feedback, the support that I've gotten for people that are willing to learn and listen and take action is blown me away positively. So it's been tremendous. I love pretty much every aspect of what I do. It was tough at first. And of course, there's some fallbacks because I don't get to turn off. My phone is going off 24/7. And if any of you guys have messaged me before, you guys know I'm responding 8 in the morning, 2 at night, so 2 a.m. at night. So either way, I eat, sleep, and breathe this stuff. So for me, it's a good fit, and it's been an absolute pleasure.
Wow, man, that's intense. Like, I have every single notification turned off, including my text. My wife gets ticked off at me because she can't text me.
Yeah, I keep my phone on silent, so I don't get I get notifications all the time, but my phone doesn't vibrate, it doesn't ring. Because if I kept that on, I'd be running through battery every hour, right? So I keep the phone silent, notifications come in, but I'm always checking. So last I checked, this is pretty absurd. Okay, don't judge me on this. But you know how I have an iPhone, so the iPhone tells you your weekly average daily screen time.
Yeah, I remember that.
My screen time, again, this is not for good or bad. I'm just telling you guys the transparency here. I spend about 9 hours of screen time on my phone, right? That doesn't include me on the computer or looking at markets on the computer, doing anything I do on the computer. That's just my phone. That's just me just probably answering messages, questions in our chat room, whatever, right? So yeah, I spend a lot of time doing what I do throughout the day.
Yeah, well, it makes sense. You're running a business where in the mobile age, of course you would be on it. It's not like you're just dicking around on some.
No, I don't I have my personal Instagram, which I should be posting more on just to give people more of an insight as to who I am. But I'm rarely on Facebook. I'm rarely on my personal Instagram. I'm rarely doing anything. I mean, it's okay to wind down, but for me, I don't know, once I get to this collaboration and speaking with people that I want to speak with about markets, I can't go back to just doing the regular, right? I can't go on Facebook and keep scrolling. I can't go on Instagram and keep scrolling. That's just me. I can't do it because I find that I could be answering a message or, getting on a call or looking at markets, looking at opportunities. So that's the way I guess I'm wired. But that's not to say that, it's bad to wind down or calm down or do things that are not always productive. That's being human. I'm not going to be one of those people that say 24/7, you got to keep working and no sleep. No, I'm not saying that.
You're mission driven, right? Like that. That's why you're.
Yeah, it's
turn off a lot.
I've been wired that way. I mean, my history in terms of, I mean, not a lot of people know this. I've had a very challenging upbringing in terms of not financially wise. I come from a regular average family. I'm not one of those I come from the street or something. Apparently every entrepreneur now comes from rags to riches type of thing. No, for me, I come from a humble beginnings. My first car was $500 But to give you an idea, I've had a lot of setbacks in terms of health-wise, not in my control. So I have learned to simply just push through, be like a rabid pit bull, just attacking everything I want to get after and not letting go.
Interesting.
Right. So that's been my philosophy with everything I do, whether it's my trading, I just simply am unrelentless, and that can work against me because I don't stop. I don't give up. Sometimes it's important to know when you're tapped out and move on. One of my things, if I have to be honest, I can't let go. I can't stop. So I just have to keep on brute forcing it no matter what I do. And it's worked out. So like it worked out fine for now, right? It's always going to be something where you're going to get kicked down. You're going to have to, take a licking, but so be it.
Let's dig into this a little bit because like part of what my approach has been even more so now and what I'm trying to do with my own business is take this holistic approach because like I feel as though for financial health, it takes everything, right? It's more than just like knowing the strategies and what you're going to trade and this and that, but it's also like there's the mindset and also your physical well-being too, because well, when you're energetic and you're vibrant, you're going to make much smarter decisions than well when you're feeling stressed, like you're fatigued, and then all of a sudden, oh shit, my account is down, how much the past several days, like are you in a great position to like be making decisions on the fly?
Absolutely. Absolutely. And you hit the nail on the head. Having that mind, body, and sort of balanced, right? If your body is doing fantastic, but your mind is not there, or if your mind is not there, but you're healthy physically, that can still, and you factor that in with the market, that could still throw you off, right? So we deal with this every day. I deal with this every day, having to make sure that, I'm operating as I would say smoothly as possible. We're never at 100%, and anyone that says they're 100% all the time is a liar. We're trying our best to be as composed, especially during these markets, especially during this time. So I find it very kind of relevant, the fact that, the S&P's dropped maybe about 7% from the highs, just this week. That's a big drop, right? It's not the end of the world, but, people are kind of finding themselves being a little bit uneasy. And I've seen that with people I've spoken to online or even our members or, people that I deal with. And that's okay. It's okay to be anxious. It's okay to not be completely calm, but being aware of how you're dealing with it as a response, as an emotional response, and as a physical response, because it takes a physical response to go in and sell or go in and buy or short. So that's a physical response. People need to be aware that their mental cognition, their mental emotional response is separate to their physical response. If you have an emotional response like I'm sad, your physical response should be, let me shut it down. Not let me prevent trade and buy this or short this sucker, right? So I'm a big believer in making sure we have the physical and mental / emotional responses in sync, because when one falls, the other can go haywire, because it's like a self-fulfilling prophecy. You're physically placing a bad trade, and then after the trade goes bad, you start emotionally beating yourself up.
Right.
So you see
Yeah,
how
well, this shit takes a lot of energy.
yes.
It takes like a lot of brain power and you could walk out of a room like oh man, like what a rough day, and somebody else might see like what the hell, man, you've been clicking buttons all day, like sitting at a desk,
Exactly.
it takes a
Exactly.
massive
I'm
amount
wasted.
of
Like, I'll be honest, at the end of the day, like when I'm go to sleep, maybe sometimes I'm up till 4 a.m. Till pre-market opens. Pre-market opens 4 a.m. Eastern. I'll be honest, I've been up giving updates on markets at that time. Just day before, I was up at till like 5 a.m. giving updates on how futures are looking, on how pre-market's looking. And when I do go down, when I do sleep or when I do turn off, I crash simply because it takes a lot. I'm not physically out there running a mile, running a marathon. I'm not there pumping iron, but just doing this, like you said, mentally is exhausting. It takes a lot of willpower, it takes a lot of discipline, and that's taxing, right? When, I've done a lot of reading on psychology, neurolinguistic programming, all that kind of stuff, and ultimately understanding the human body and the mindset, and even our willpower is like a muscle, right? This is why we see that, people who are, working, who work 9 to 5, they're more likely to do, I would say, negative acts, or, cheat on their spouses, or drink, or do negative things in the later day. Why? Simply because, not because it's dark, but because they've run out of willpower. They've been exercising that willpower throughout the day, right? Making sure that they get off their phone so that when their boss is there, or making sure they fill out this paperwork because they have to. That's all taking willpower, right? That's all taking energy. And once they finish the end of the day, they're more likely to pull back and do stupid things, right? So
Yeah.
willpower is a muscle, and building that is critical to trading, to anything in life that you do. You need to build these keystone, I would say, keystone foundational habits or personality traits.
Yeah, man. And like something that you mentioned before too, like with powering through, like, do you take breaks?
Yeah, breaks are important. Breaks
Like,
are important.
how frequent?
It all depends. For me, it depends on the day. Some days, my days are very hectic. Some days I'm out, and sometimes I'm in meetings. Sometimes I'm on phone calls. So for me, I take breaks. Usually, when it comes to market participants, around this time, noon, 1 o'clock, things do slow down, right? In terms of volume, in terms of activity, we've seen that. So this is, I would say, the ideal time to take a break. So usually at this time, sometimes I'm grabbing something to eat. Like I was just having tea right now. So for me, it flows. But I know 9:30 a.m. to 4 p.m., anything can happen, because in terms of markets, because I need to have access. If I'm not at my desk, I let my team know I'm not at my desk, but I do have my phone on me all the time. So when I do take a break, I may not be at my platform, I may not be at my desk, but I'm still connected somehow, right? And it's up to everyone else if they want to completely take a break or shut down for that hour, half an hour, or 20 minutes. For me, I'm always some point or time connected, even when I'm taking a break. So for me, it's kind of like a semi-partial break, but I'm taking it whenever I can. For me, my days are unstructured, and I'm okay with that. That's not for everyone, but I'm okay with that.
Something that's been a game changer recently, and I'm the recent being within the past month, maybe a month and a half, has been taking short breaks every hour. Right? Like so, like I've got my timer, right? It goes off, like it's empty. Time to take a break. So, like, what's that look like? Just like getting up, moving my body, stretching, and then I'll do this 2-minute meditation, right?
Right.
That I got from this guy, Brendan Burchard. Like I've been on a big Brendan Burchard kick. Like if you don't know who he is, like a high performance guy, talks about a lot of this stuff, but he does this release meditation technique where you just close your eyes, you repeat the word release to yourself, like rhythmically, like release, release, release. It's like a transcendental meditation, and you just do it for 2 minutes, and you're focused on releasing tension in your body, in your shoulders, in your jaw. Like if a thought pops into your head, you release that too, and then at the end of it, then it's like, all right, what am I going to do for the next hour? Like, what does my A game look like for whatever that activity is going to be for the next hour, and who needs me to be on that A game for the next hour? So it's like releasing tension and setting intention, and like, dude, like that's been like an absolute game changer for me as far as like staying focused and keeping energy up throughout the day. Like,
Yeah, I'm not surprised, because, we know that meditation, in any form, whether it's transcendental meditation or anything like that, meditation takes many forms, whether you're closing your eyes or, just kind of letting go, either you're kind of synthesizing thoughts. In many ways, we know meditation decreases cortisol levels, right? Which is
yeah,
stress. So that's another great one. And that helps, because when you take that 2-minute meditation session along with that 10-minute break, you effectively increased your chances of making good, solid decisions, right? Because when we're under stress, our flight and fight response is more elevated. So when we are going to react to something, whether it's in the market, whether it's a spouse, whether it's a business partner, or whether it's a phone call, anything, we're going to react in a more, I would say, perhaps aggressive, or more, I would say, faster, more without thought type of manner, right? So if you're meditating and that's working for you, that's great. For me personally, I find it really hard. I think it's more of a personal thing for me, where I find it hard to just sit down and just like turn off and just try. I've tried it, hasn't worked too well for me, but I know for a fact that there's plenty of people it helps, and the net benefit is there. Absolutely. I just wish I could do it. I wish I could just make it work for me, but it's always something I'm trying. Like if it doesn't work for me, I'm like, okay, you know what, I'm going to try just letting go, just seeing. I don't know if you want to call that meditation, but I try. Results for me differ, but ultimately the process is sound. The ability to do that, the ability to turn off, because the human body was not meant to sit there for 1 hour, 2 hour, 3 hour stretches of a time looking at numbers and charts and syntax, which is text, right? We're just not meant to do that as human beings, right? So getting up, moving around, great. Recharging, whether you have something to eat or drink, fantastic. Letting go, turning everything off, and just for 2 minutes, amazing, right? So if you can do that and that's worked for you and anyone else, keep doing that. I just wish I could.
Yeah, man. Like the whole, like how we've evolved as a species, like is incredible too. And like that like much of that plays into how we respond to the market too, right?
Yep. And evolution, our reactions, how we're wired is huge. A lot of people say, Riz, you're great. Like you knew this drop was going to happen. And I said on Friday, that, okay, we're going net short in the trading account. I'm bearish, because Friday was the indication I needed. And of course we had that subsequent 3% drop on Monday, 3% drop on Tuesday, and yesterday turned from a bullish day to a negative day. And then now we're down about 1.5% last I checked, or 2%, something like that. So it's been great. I didn't expect it, to be honest, this bad, but you know what? It happens. It's great opportunity wise, but people are like, Rich, how can you tell these things? Like, how are you able to just look down from a top down approach? And I can say without a doubt, that's what I excel at. I'm not a day trader. I'm not a scalper. My ability to look down, because this leads to my banking experience, this leads to my asset management experience, where we're taught and we're supposed to look down. One singular position is not make or break it. We're supposed to look at it from a portfolio aspect, from a fund aspect, from a capital aspect, from a risk reward ratio. All these kind of performance metrics make a difference. So for me, when I look top down, that's where I operate best. And how am I able to do that? People think I'm looking at some crazy chart, or no. Ultimately, it comes down to being aware of market psychology. And market psychology, in another word, is psychology of human beings. If you can understand people, if you can understand how the herd mentality works, how people think and how they react, you can utilize that, right, in the market. And when I saw Friday, I don't know what it was, maybe it's intuition, whatever the case is. For me, I had this feeling based on what I saw, because intuition is simply your mind picking up things subconsciously that your conscious has not synthesized yet. So for me, when I saw that, okay, I'm going net short. I could have been wrong, but for me, it was the right call. So I did that, and I made sure those in my team and our members knew at the moment I did. And it's worked out great for the most part, right? It's not perfect.
Would you be able to walk us through just a little bit of your process if I pull up some charts? Like I'd love to learn something too. Like I'm a student of the market just like everybody else.
Absolutely, bring it up. Whatever you bring up, I'll commentate on it.
So what I've got here is 6 charts. They're all daily charts, and it's the major indexes. We've got the S&P in the upper left, the NASDAQ in the upper right. In the middle, we've got the Russell 2000. Over here is the NYSE, and down here is the Dow.
Yeah.
And so I know you mentioned top-down approach. Like normally for me, right? Like it sounds like we're, and I guess we'll see how similar we are. But I'm looking at monthly, weekly, and daily on all 5 of these.
Yep. That's similar. Something that I look at. I also look at heavily on sentiment data. I'm also looking at macro. So although macro depends, some weeks we have heavy macro data, right? We have the Fed talking about interest rates. Some days we have, business sentiment. Sometimes we have, manufacturing numbers, right? So every week changes, but ultimately when I'm looking at this stuff, similar to you, obviously my layout looks a little bit different, which is fine.
And where are you picking up this data?
I'm picking it up all over from Bloomberg. You can use an RSS feed. You can use FinViz. There's many different ways. Some people, you have like a Squawk box where they have live updates with like essentially an audio form. Sometimes your platform, like I know TD Ameritrade's Thinkorswim platform has great like a news tab where they aggregate all the different financial news into one feed. You can use that. Interactive Brokers, which I use, has one as well. So I'm siphoning information all the time. I spend about 2.5 hours a day just reading. Not just reading, I'm not talking about looking at charts. I'm talking about reading, physical reading of financial news, reading reports, macro reports, microeconomic reports. Also reading books that, not like fantasy or fiction, which is nothing wrong with that, but reading books on human psychology, human mindset. And I've shared these books with other people because I find that that's helped me grow in terms of my experience, in terms of my knowledge on how the human being itself operates, whether it's mentally, physically, so we can utilize that and bring that into the market. That's my kind of, I would say it's not a secret sauce, but that's my style. That's my style of bringing it in.
You've mentioned books a couple of times already. Can you name drop a few of them that some of your favorites or
Yeah. So, I mean, for me, the Market Wizards books are pretty much a must because of the ability of Jack Schwager to bring the author, Jack Schwager. In fact, I don't know if I can say this. I haven't spoken with Jack itself, but I have had an interview with Jack. So actually he flew in to visit me last year in September. So I won't say any more than that. He might get mad, but I did have an interview with Jack Schwager. So anyways, I can't say any more than that. But the point is, reading any of the books by Jack Schwager, Market Wizards, New Market Wizards, Hedge Fund Market Wizards, there's different, think of it like different series. There's a different series of Market Wizards books, but read any of those. I think, The Intelligent Investor is one I always say, but it's a very dry read. Reading, I think, some finance related books that are not going to teach you anything about trading, but simply how the classical Wall Street norm, the kind of the debauchery or kind of the things that used to go on back then before pre-2008 is a really fun read. I've read The Black Edge by Sheila Kolhatkar or something. It's on Steve Cohen and kind of the ways they would use information that wasn't publicly accessible to gain an advantage, right? So it's called The Black Edge. Look that up. That's on Steve Cohen and his hedge fund. There's so many. I mean, right now my brain is, when you mention books, it's like 20 or different ones are kind of running through my head, and I'm like, which one would be the best? Just cycling through. But yeah, anything about Market Wizards would be a great start.
All right, fantastic. All right, so back to this here. Like you mentioned that, like you have the news feed going on, and you're picking out different things. I'm curious, like from the perspective of a trader that, like I don't look at the news at all. Like I'm trading based off of the price action, based off of what's passing my scans, based off of what the stocks in my portfolio and all my watch lists are telling me. And like I'm seeing that as the collective telling me what they're doing. Like how does the news affect your perception? And like I feel like it would give you a bias of some kind. Like, am I right in saying that?
Yeah, no, yeah, you're absolutely right. The news can shift, especially these financial headlines. Remember, and to me, this is obvious. To you, this is obvious. But to the beginner, it's not so obvious, where these financial headlines are after the fact. So anytime you see something in Bloomberg, CNBC, whatever, right? I mean, Cramer, Jim Cramer is on, the show is running because people pay attention to him for whatever reason. And I'm not going to come here berate Jim Cramer, but I will say that, he's on, he does what he does, but people still tune in. And to me, it just blows my mind that the show is still running because there's viewership, right? So this tells us something, that people are looking for something. They're looking for something always, but they're just looking in the wrong place. And like you said, the news can induce a bias. Jim Cramer, if you watched, and he's talking about going long Snapchat. I don't go along Snapchat, but as a trade is a different story. I would never buy that thing. But if he mentions it, maybe you're going to start thinking like, oh, Jim Cramer, he's on TV. You know?
Yeah.
So these kind of things happen all the time. I personally look at news, but in such a way that to see what the financial media is pushing. I'm not trading on it. I'm seeing what they're pushing so I can get an idea what their narrative is, right? So if Bloomberg, MSNBC, CNBC, anywhere, Fox Business, wherever, they're all talking about coronavirus, which we know is the big thing. I mean, President Trump had his conference yesterday. Everyone's talking about coronavirus. This is the news media cycle. That's the cycle. Before it was trade war. Before that, it was, something else, right? In the beginning of the year, we went from having potentially World War III to now all of a sudden, all of us becoming infected zombies, right? So it's a crazy divide, right? I see this and I just laugh because you can't make this stuff up. You can't make this stuff up. The stuff that's going on, 2020 has already been an insane year comparatively. But yeah, like you said, I look at news because my filtration system is different from someone else's. When a beginner looks at news, they're going to react to news. I look at news not to react, but I look at news to be abreast and be ahead of the curve and see what the financial news media or regular news media is pushing, what narrative they're pushing. Can I extract some kind of narrative from that? Can I extract some kind of decision making from that in terms of making sure I'm not going with the herd, making sure I'm not just getting pulled with the current? I am more of a contrarian. So if I'm seeing stuff all about coronavirus, I'm thinking ahead. I'm thinking, what opportunities is this bringing up? Not, oh my God, coronavirus, sell. I'm not smashing the sell button, right? Like some mom and pop might be doing. So for me, news is key. Am I reading every single headline that comes out? No, I'm just filtering it. I'm looking at it and I'm just discarding whatever I want to keep. I retain the rest. It's out.
That's such an interesting way to use the news. So like you're using the news versus like reading the news or consuming it.
Yes, that's beautifully put. I couldn't have put that better way, because that's exactly what I wanted to say. I'm utilizing the news to my benefit. I'm utilizing sentiment, narrative, financial euphoria, or in this case, financial panic. I utilize both sides, right? And that's, to me, what I find very, very amazing and interesting. Instead of just looking at charts and lines all day, I find that the most interesting, where I can bring in that human element, right? I'm forever a student of markets, but also a student of psychology, a student of, human evolution, understanding how we as a species think, make our decisions, what we're prone to, what we're shying away from, what we're not good at. As human beings, we may be great at some things, but we're not good at other things, right? So being aware of these things is something that I personally enjoy and I'm fascinated with.
So you gain this awareness of like, well, what's streaming in the news from Bloomberg, from Interactive Brokers, from wherever, like that gives you some kind of a feeling of like, well, what's going on? Well, what's the next step after that?
Exactly. Absolutely. For me, it's after that, once I synthesize everything, and it's very fast and it's throughout the day, because news headlines don't stop. We know they're not like, okay, it's 10 p.m. so bye, everything's shut down. No, we'll get updates all the time. So for me, it's about, how do I make a decision? Not always am I synthesizing it and making a decision from it. Sometimes 90% of the time, I'm not doing anything based on what's said, right? Because if I was, that would be futile. There's absolutely no way we can trade every single headline. There's absolutely no way we can trade every single narrative. Sometimes there's euphoria going on. Everyone's saying, buy this hot tech stock. Everyone's saying, all the FANG companies. When everyone's talking about FANG, Facebook, Amazon, Netflix, Google, I'm getting the hell out. I don't own any of those in my portfolio right now. right? And if you look at the largest drops on a
Are
large
people
cap
still
base,
talking about FANG stocks?
yeah, people are all about FANG stocks. I mean, for me, I'm usually in names that most people may not even be aware of, right? For
Yeah,
my
well,
investment portfolio, right? These can be MLPs, these can be, large cap companies that are not only just, they're not consumer discretionary, but they provide an important, let's say, aspect of our manufacturing, whether it's in the US or global manufacturing, whether it's supplies, right? So these are things that people need to be aware of. And that's just my personal style. There's nothing against Facebook, Amazon. I was a huge Apple holder. Bull, if you've taken a look at my past history, one of the greatest investments I've made have been on Apple. But right now, have I been holding since it's gone up about, I don't know where it's at right now, but 300 or whatever? No, for me, that was too much. And even historically, when we look at Apple, just to kind of delve deeper on that, we know that Apple did become overvalued, in terms of a financial ratio, in terms of, the PE ratio, growth multiple, it did become overvalued. And once one of the best companies in the market becomes overvalued, that's an indication of euphoria. That's an indication of mania, right? Mania is the opposite of panic. Panic is on the downside. Mania and euphoria is on the upside. So when I see that stuff happening, to me, it's a bad sign. And it's only a time period. And you can quote me on this, Mike. In my chat room, I told my guys, I said, beginning of the year, I said, you know what? And even in the end of last year, I said, I don't know when a pullback is going to happen. Everyone's been calling for a pullback. It's easy to call for a sell-off, but for me, I knew it was imminent. I knew it was coming sooner rather than later. I didn't know it was going to be this 7%, 8% drop this week. I didn't know that, but I knew it was going to happen simply because I'm looking at sentiment, simply because I'm aware of mania, simply because I'm aware of people simply buying and speculating on anything and everything. Look at Tesla. Look at where it went. Look at space, Virgin Galactic. Look at where it went. I'm following these things. Sometimes I'm trading them to the downside or upside, but these things to me are conducive of mania, right? This thing is tanked, right? Like for the average person, they may not be able to fully understand how much this thing has gone down just in the last 2 to 3 days after earnings, right? So Tesla even, I mean, there's so many different companies I could keep going on about, but ultimately I look at it from a contrarian standpoint. When everyone's buying companies like Space to YOLO and buy options on it, calls, which is fine. If it makes money for you, go ahead. It's great. But I'm more so waiting think of it like on the sidelines, waiting to pounce, right? I'm kind of like that tiger, lion, whatever, just waiting in the bushes, right? Just waiting there. When the time comes, when everyone's kind of had their fill, I come in and take the carcass. Right? That's my method. I'm not saying it's the only right one or it's the only one, but that's my style. And people that can appreciate that style do really well alongside me. People that have a hard time gelling with that, they only are good when things are pumped up. They don't do well because it goes against my style of trading.
Yeah, like I think that there's a real important thing that you said in there, and it's knowing thyself.
Yeah.
Right? If you know yourself, know your goals, know what you want and are able to execute, then it's just kind of reverse engineering your path to that. And then, if they're aligned well with what your goals are and you're very transparent, then a amazing fit. If they're just like trying to, hit the lottery, then the candy store is down the corner. Buy some lotto tickets.
Yeah, no, and the thing is, people make money. You are able to make money, playing these lotto plays. I'm not going to deny that. But what people don't understand is once in a while, they'll do well. But everything mean reverts. Everything in life reverts to the mean, right? So that's my philosophy. Now, people may not agree. That's up to them. But ultimately, we know things eventually mean revert. In fact, what's happening this week is classified as mean reversion. The markets are reverting to the mean in terms of, for those of you that are not, sophisticated in market jargon or whatnot, effectively it's coming back to the average area, right? Life effectively operates in a bell curve, right? Think of it like a sloping hill like that. So ultimately, majority of the data will be in the center, right? There will be outliers. There'll be people that are making millions. There'll be people that are losing millions, but the middle is where it matters, right? So that's what's happening with the market. It's coming back to the middle. It's coming back to the mean. And Mike, as you brought up, I think that's the 200-day moving average in red.
This is Tesla, and I just thought that it kind of fit your example beautifully, where it ran up, got far away from the mean or the moving averages, right? And now, look where it's headed. This is the 50-day.
Yep.
Right. Yeah, the 50-day. Like, how high above the 50-day was it? Like 38, 40%.
40%.
At one point. Over here, it was
Insane.
50%. That's a lot. So it needs to come back, and
yeah, it needed to at some point cool off, right? Am I saying this thing's going all the way down to 600? I'm not making that call yet, but look at the candle today, right? Definitely a big gap down. So yes, in short, mean reversion is one of the styles I gravitate towards. I talk about this in my course. I talk about this in my teachings, because ultimately, I said this on my IG live the other day, but I'll restate it here. No matter what strategy you have, no matter what method you have, Mike, you have your ego philosophy that you use for whatever it is. Ultimately, when it comes down to actually trading and synthesizing it and going and doing the act of trading, all these strategies and styles will fit into two major categories. One category being trend following or momentum trading. Okay. Right. Another category being mean reversion. Every different strategy, no matter what we call it, no matter whose style is, will fit into one of these two, right? I use both, okay? Just like how I use technicals, I also use fundamentals, right? Because I have a component of my investment assets in fundamental-based companies, right? So I use both. And for me, utilizing both of these and knowing when to use which one is critical. Right?
Yes.
Ride that trend is critical. Knowing when to bring it back down and be someone who's a contrarian, taking that bet where things will come down to reasonable levels, AKA the average or the mean. That's important to differentiate, right? And that's what we were able to get right on Friday. And that's ultimately the kind of breakdown of how I got to the decision that I did on Friday.
So I really want to dig into that last part a lot, like the juggling, the mean reversion and the momentum. I also want to get to some of the option strategies, because that's what we promoted this, or like at least like part of it, some of the key topics. But there's been so much gold in this. I don't think anybody's complaining. But I also want to leave a little bit of time for questions. And so anybody that's in the room, if you have questions, just go down to the, scroll your mouse down. There's a little Q&A section, or there should be like a spot where you can pop in comments. Just start putting them in now, and in a couple of minutes, we'll start getting to the questions that you guys have. So back to mean reversion versus momentum. I love that you put it into those two categories and explain how challenging it could be to manage both of those. Because it reminded me of a conversation that I had with Mark Minervini, who was on the show a couple of months ago. And he's one of my mentors from about, I'd say, 6 years ago. Fantastic guy. I love Mark. We met up, we had lunch. It was great. But one of the things that he was talking about on the show was how it's so difficult for some people try to do what you're doing, right? To do one strategy, do the completely opposite strategy, and there's less than 1% of people that can vacillate between those two things, right? It's difficult to jump from one frame to another. How do you do it? I'd love to hear some of your perspectives of how you make that mental shift, and what's that look like.
Yeah, it's tough. I will say it's tough. I teach my students two strategies, one that fits into each category, right? I teach
Mhm.
this, but I'm fully aware that it's tough. It's easy for me to explain it, easy for me to tell them what to do, but implementation is the hard part. And I guess without glorifying it, it just comes down to sucking at it at first, right? I struggled with it. I absolutely struggled. Like I just, for me, I could not wrap my head around in the beginning. And I didn't even know these two categories were things. I eventually had to define them. I eventually had to say, okay, no matter what strategy you use, it has to fit into these kind of hierarchies, these kind of, archetypes, right? So for me, once I was able to compartmentalize that and say, okay, no matter what strategy I use, it fits into one of these two, which one am I using now for this market? Which one am I using for the market that we had in 2019?
Mhm.
Which one am I using for a market that's dropping like it is now? So it
Okay.
was hard. It's very hard. It's not for everyone. It's not for people that are beginners, but it's something they should, I believe, okay, I may be biased, but this is something they should be hopefully be working towards in their experience. Because trading 50-day moving averages, getting in and out, scalping, that's mindless, in my opinion. That's mindless because there's no way you're developing anything about macroeconomics, herd mentality, besides just looking at a bar moving up and down for every 5 seconds or 10 seconds or 5 minutes, whatever interval you're using. There has to be more than that, right? Because for me, I look at things as a process. I look at things from always a top-down point of view, like I said. And if I'm utilizing these two categories and moving between the two, whichever I feel is right for that time, I can be wrong. It's,
Mhm.
I can be wrong. But the fact of the matter is, it was very hard in the beginning. And I just had to keep on using both. I had to know and define when am I going to use one or the other. And then if I make a mistake, make sure that I correct it and correct it in a timely fashion. Like I'll be taking a mean reversion type of trade in a trending market. I'm probably going to get bruised, right? But it's up
Mhm.
to me to take responsibility of that and now say, okay, I got the style that I'm using wrong. It's not conducive. It's not aligning or gelling with the market, right? Markets, as we know, tremendous tear last year, 30% up. You cannot try and use a broader top-down approach using mean reversion. You're going to get slaughtered, right? We had
Mhm.
Apple go up 40, 50%. We had Amazon go up like 15, 20% in one day after earnings. Like you're going to get slaughtered if you keep trying to do this. So knowing when to use which method is
Mhm.
crucial to success. I make sure I have both in my toolbox, just like how I have technicals and fundamentals, just like how I have short-term swing trading and long-term investing. My entire life has been mastering not simply one discipline, multiple disciplines, right?
Mhm.
And if I can master both, great. There are things I'm absolutely crappy at. I absolutely suck at certain things, and that's okay. For me, I've devoted my life to making sure I excel at fundamentals and technicals, mean reversion, and momentum trading.
So if we were to compare this to like say building a house, it's all kind of sounds like you're the general contractor that's able to do a bit of everything, and you know that hey, like if I need to hammer this nail, I'm not going to pull out the wrench. I'm going to pull out a hammer, and if I need to do some plumbing, I'm not going to pull out a screwdriver, right? Like,
Yeah, exactly. You're right. You said that right. And at first, it's important to know that at first, when you need to hammer something and you don't know any better, you don't know what's a hammer, you don't know what's a screwdriver, you're completely new. Sometimes you may be using a screwdriver to try and hammer, right? I've done that, and you have to realize that when it doesn't work, you have to fix it, right? Sometimes you have to keep at it. There's a time and place to reassess and walk back and reassess, right? If you're gonna keep being adamant and being very, very stubborn and keep trying to use a screwdriver to nail down a hammer, you may get some success, but you're just being inefficient at that point, right? So you have to know when to step back. For me, I made these mistakes. I made these mistakes. I'm a student of the market. I'm a student of my failures, right? I still am. I make mistakes all the time. I lose money. I make money. There's no singular thing in trading where if you have been doing this for 12 years, like I have, that all of a sudden every day now is just green or every day is just smooth sailing. No, right? I go through my ups and downs. I make sure that I'm able to compartmentalize it, learn from it, and move on. I think that's what's challenging for the beginner, right? And that's fair because I had a huge time, like a hard time with it when I was starting off.
What do you mean? How do you mean?
So when it comes to being able to know when you've got it wrong and learning from it, a lot of times people know they were wrong. What do they do then? They do the same thing again, expecting a different result, right? We know this happens a lot of times. Like sometimes I'll make that mistake. I'll fall into that trap. Like for example, I'll short Tesla while it's rallying up, like you showed, to 900, 960. It didn't work. Didn't work. Lose some money, get out. Okay, follow my risk management. Great. But I try again. Oh, this thing's got a crack now. Like it's at 960. Like no way it's going to 1,000. Right? It's way overdone, and blah blah blah. Well, did I learn anything from that first time? I followed my risk management. Some people are like, that's great. You followed your risk management. Pat yourself on the back. For me, I'm not that easily enthused. I have to make sure that, am I learning from it? Am I doing the right thing? That's why I've shorted Tesla a couple of times. I've got it wrong. I've got it wrong. And so have many in the asset management industry, or whether they're small traders trading from their house or a trader in an institutional firm. We've all got it wrong at some point. Learning how to adapt. Sometimes the best thing to do is not touch it. Okay. I've had to learn that the hard way as well, right? Don't touch something that does not gel with you. For someone like me, I use fundamentals. Fundamentals don't make any sense for space. This thing had last quarter, I think, a $400,000 revenue. It has less revenue. And Mike, I said this to my students. I said, this thing has less revenue than I do in my business for one quarter. And it's a public company. And it's trading at a $6 billion or $5 billion valuation last I checked. Right? So it doesn't make sense. So for me, I have to sometimes just say, screw it. I'm not touching this thing because this thing is boosted. This thing has insane amounts of randomness and volatility depending on what side of the bed Robinhood users wake up on and if they decide to buy it or sell it. Right? That's the absolute honest to God thing, and I'm unfiltered in my approach, as you probably know. Right? I take no punches back. I just keep pulling up. So for me, that's my view. If something's working completely stupidly and I just don't want to participate, that's fair game for me and that's fair game from someone else. People always ask me, Riz, did you short 2 weeks ago? They're like, Riz, did you buy space? It's going to the moon. Now they're like, Riz, did you short space? It's going to hell. I'm like, yes, I've shorted it. Yes, I've made money, but really I could have got it wrong. Sometimes it's best to just stay back. Just stay back. Don't screw with it, because some people will always be like, oh, I bought this thing and look where it's up. It's up 100% in a month, trying to make someone else look like they're stupid. But no, they're not stupid. They're just making sure they're staying away from something that doesn't work with them, right? If someone's a vegetarian and they see a beautiful piece of steak, okay, well done, rare, whatever works for you. Just because everyone else is eating it and they're enjoying it, it's not for that vegetarian. It doesn't suit who they are. It doesn't suit their values, right? So sometimes it's better to stay away instead of eating that steak and trying to throw up after, right? Even though everyone else is enjoying
it. I love it. Well, we've got 10 minutes left, right?
Yes.
Like I want to be respectful of your time. And
I'm free. I think if you want to touch on options, I'm game. I don't, as I mentioned, I utilize both in different ways, and I don't want to go too deep, because obviously without examples, without having something visual, and for the time that we have, it's going to be too much, I think. So we can touch on the basics. We can touch on anything that you have questions about. I'm happy to answer.
So high level, right? Like to keep on the Trader's Mind Chat show, like all mental stuff. Like, so what would tell you it? Like, so sometimes you're an options buyer, sometimes you're an options seller, where you're writing the options. What do you see that tells you that I want to be an options buyer for this one, I want to be an options seller for this one, and what are some of the what's going through your head when you're thinking this stuff?
Great question. Fantastic. I'm glad you mentioned that, because there is a difference. There is an ideal time. I'm not going to say there's anything is absolute, but there's an ideal time to buy options and an ideal time to write options. Now, keep in mind, writing options by default is riskier. There's unlimited risk with writing options. And you mentioned that when you buy options, you know your risk right away. You know the premium is your risk when you buy options, right? Whether you buy a call, whether you buy a put, how much ever you're spending on that premium to purchase, you know that's your risk. So you've capped your risk. It's the opposite side when you're writing options. Options can be utilized in a very sophisticated or simple manner, which is buying a call, that's directional, right? Or buying a put, that's still directional. Writing is the other side, right? For someone to buy an option, they're either buying it from someone who holds it, or they're buying from someone who's a market maker, or someone like me who's creating that contract. Contract can be created out of thin air. Poof, here's a contract, right? So for me, what do I look at if I want to buy? Number one, where is the implied volatility? Implied volatility is the premium, excess premium that you're paying. If the market is thinking that there's going to be a larger move, whether it's for earnings, whether it's a conference, whether it's some kind of event, and market is increasing the implied volatility, you're going to pay more to participate, whether you buy a call or put. Okay. So implied volatility makes a big difference. If I'm looking at an implied volatility of something like space, which had before earnings had an implied volatility of about 300%. Okay. The average Joe Blow may buy an option because they think this thing could go crazy up or crazy down, and they may make money, but understand that the more you pay for the option, the harder it is for you to be making a profit, right? It's like buying an iPhone for $2,000. Maybe it's a good deal, maybe it isn't, but what are the chances you're going to be able to sell it for more than 2,000? Right? That's when you're buying an option. When you're writing an option, I don't care what price it goes to. I'm effectively putting a ceiling or a floor, right? When I'm buying a put, I'm saying I want the stock to come down. When I'm writing a put, I'm saying I want the stock to stay above. Right? If I'm buying a call, I want the stock price to go up from the strike, right? It's directional. When I'm writing a call, I'm wanting it to stay below the strike. So the beauty of writing options is you don't have to be precise in what the price goes to. You just need to know what level you want it to stay down. So usually I utilize 2 to 3 standard deviation moves, right? And in my platform, I can see what's a 2 standard deviation move, where the current price is. I will say, after a lot of testing, 2 years of testing, writing naked call options and put options, I implore you, whoever's on here, do not make the mistakes I made and write naked call options to collect premium, because it's stomach churning. Like, you will throw up for the most part, because I've taken just 2 weeks ago $400,000 worth of exposure on Tesla with naked call rates. Okay. And it's gone up against my position. I was able to get out. Okay. I lost a little bit of money, but it could have gone excruciatingly painful for me, because when you write call options naked, okay, remember, when you have naked call options, there's no other position there. Okay. It's saying it stays below a level. If it goes above a level, well, guess what? You're screwed, because now you may be forced to short or take that position short times 100, because we know options are leveraged, right? If I wrote one contract of Tesla saying that I want Tesla to stay below 900 and Tesla goes to 950, guess what? That's like $5,000 loss right there, right? So keep in mind that writing naked call options is very risky. I do not recommend it. That's something I have to say for my own conscience. Writing puts is something that's, I think, a middle ground. Think about it this way. When you want to buy a stock, let's say Apple is down to 280 right now, and you think Apple's a great value at 250. You made that decision, okay? What you can do is you have 2 options. You can put a limit order to buy Apple at 250, okay? Expiry 2 months down the line. If it hits 250, you'll buy Apple, okay? Now, when you do that limit order, like Mike's brought the chart up perfectly, right? So Apple's at 284. If you write a put option at 250, okay? Perfect. Thank you, Mike. You're saying if Apple gets to that point, I'm okay with taking delivery of 100 shares of Apple at 250. What you have done essentially is place somewhat of a limit buy order. Think of it like that. But you get paid for it. You get paid for writing that contract. That's the premium, right? When you buy a contract, you're paying the premium. When you're writing a contract, you're collecting that premium, right? And I'm not saying someone should go out there and do this trade, but this is just for example purposes, that think of writing a put contract as a limit order to buy. Okay, with a limit order to buy, you're not getting paid for placing that order. With writing an options contract, you are, and there's an expiry to it. So if Apple stays above 250, let's say I wrote a March 6th or something, expiry 1 week out, and Apple stays above 250, I keep the premium. Okay, I don't have to buy the stock because it didn't get to 250 or lower. I still keep the premium, and I'm free and clear to do what I want after the fact. Right? So you can effectively get paid for putting up capital to say that I'll buy at this point. If it reaches that point, you take delivery, right? That's with the put. You take delivery of 100 shares of Apple, right? You have to obviously have the capital to this. So writing options for 95% of the people, it's probably not going to be viable. You need an account size. You need to have the ability. Not all brokerages will allow it. You have to have options clearance level 3 or 4. Okay, most brokerages will not even allow you to do naked call rights, like I explained before. That's way too risky. It's unlimited risk. Most brokerage won't even allow you. Okay, but writing cash secured puts, that's a good way to generate some income and potentially buy companies at values that you wanted to buy them to begin with. Right? If I wanted to buy Apple at 250, it's getting close to, I think it's the 21 EMA, I think, Mike, I think maybe that's what it is. Or
down here?
That's the 200?
That's the 200.
That's a 200. So it's getting close to 200. I'm okay with buying at 250. I'll write one contract for 250 and I'll take a premium. Maybe the premium is like $2, which is $200. I'm getting paid $200 for keeping this option, and maybe the expiry is 3 weeks from now. So I get paid $200 for potentially buying Apple at 250, 100 shares. If it gets there. If it doesn't, I don't have Apple. I didn't buy it. Contract expires, worthless. I keep the $200. Right? That's like a limit buy order where you got paid. That's the simplest.
So a limit buy order where you get paid if it expires out of the
still
money.
Get paid.
And if it hits it, then you're out the premium, but you now own at the price that you wanted.
You still keep the premium. That's the beauty. You still keep the premium, plus you take delivery of Apple shares at 250. You keep the.
So you just need to be able to buy it.
Exactly. You need the cash to buy it. So if I have, $25,000 in my account and I'm okay with buying Apple at 250, I get the premium. And if it goes below 250, I'm taking delivery at 250 for $25,000, right? For one contract.
Right.
And I keep the 200.
So it's writing puts for that.
Yeah, you keep the premium, right? No matter what. Let's say Apple starts moving up. What's going to happen to my put? My put's going to decrease in value. I can buy the put back and close the trade and still make money, right? Because the put option, just like any options, is its own security. Its price moves based on the underlying, which in this case is Apple, right? So times I've written a put like this situation and the stock moves up. It moves against the price. What's going to happen is the put value is going to come down. I can buy the put back and close the trade and still make money. Now I don't have any exposure to Apple. I don't have to keep that $25,000 cash. Plus I made $50 or $100, whatever the case is. I'm just making that number up, but it could be reasonable.
Interesting. And just so that I and everybody else understands too, like, can the reverse work for calls?
Absolutely.
Or no, because you would be shorting?
I wrote calls. I'll tell you right now. I'm going to play my hand here. I wrote a metric ton of naked calls on Space. Mike, if you bring up Space for me, that would be fantastic. Yeah. Let's do this live. Let's do this live. I wrote a shit ton of, okay, I'm being very absolutely transparent. I wrote a metric ton of naked calls on Space Virgin Galactic at price of 44 all the way to 50. Meaning.
Wow, that's a great. Well, when did you write them?
I wrote them last week. I wrote them on Friday, expiring this Friday, right? I wrote them then. So take a look.
Right here.
Exactly. So it was at about 35, 34. And I said, I want space to stay below 44 and 50. I laddered them. So keep things simple. Let's just say I wrote multiple contracts at 44, right? Which I did.
Like between there and here, we've got Riz writing contracts. Writing calls.
Yep.
Okay.
Remember, this is the opposite of buying. I'm writing calls. All I'm saying is I want the stock to stay below 44 and stay below 50. Okay.
Right.
What happened? That's a risk. What if it goes above 44? I'm going to have to end up short, right? If it goes above 44. In this case, let's walk through what did happen. It didn't hit 44. It didn't stay above 44. It's expiring this Friday. Look at where the price is right now, 23. My options is already like 99% in the green. I'm going to hold it because there's no need to close it. They're going to expire worthless tomorrow, right? So I'm keeping all the premium anyways. But I could have closed, yesterday when it was at 32 for like 60% profit. But there's no point. I'm keeping the premium all together. So when I wrote that, I was wagering that it will stay below 44, okay? Because it stayed below 44, I'm keeping all the premium, and people that effectively bought the stock are losing money. People that bought calls are losing money. I wrote calls. I'm keeping money and I'm making money, right? So in this case, when it works in your direction, you can do really, really well, right? Remember, this is a high risk trade. I did this because it suits my account size. It suits my risk tolerance. And I did this, you know why? Touching back, because of the volatility, the implied volatility on these contracts was about 300%. Okay. I got paid ridiculous amounts of money to have so much of a gap. Like I left space, right? I left space in space. Okay? I left space. I didn't just write a contract when the price was at 38 for 40. No, I left a lot of room.
So you want high implied volatility when you're writing.
Exactly. Right. When you're writing, high implied volatility is ideal because you're getting paid more. Right. It's like if you're in this phone selling business and iPhones, prices go up 50% because there's a shortage. That's a good business to be in, right? When you're selling. It's a bad business to be in when you're buying, right? So that's how you want to think about it. When I see implied volatility higher than 80%, 90%, again, there's no exact thing, but if I see implied volatility higher than 80 and 90%, I'm most likely not going to be an options buyer. I may not even write them, but I'm not going to buy because to me, I need an excessively large move for me to make money. Majority of options end up losing money or expiring worthless. So as an option writer, you're already on the right side of the trade. As an option writer, time is on your side because options decay. As the contract gets closer to expiry, options decay. As an option buyer, you're against time. As an option writer, time is on your side. Okay. Again, it goes into a lot of detail. There's a lot of stuff behind it.
Data connection lost.
Sorry, that was just my platform. But there's a lot of nuances in options. Of course, for something like this, very simple, it's difficult to go into it in detail in the limited time that we have.
No, like, dude, like you just dropped so much gold. Well, like there's another metric ton.
Yeah.
And to go back to the house building analogy from earlier, you just handed us a whole bunch of power tools.
Absolutely. That's right. That's right. And I'll say one thing, options, I think Warren Buffett said it, so I can't take credit for this, I can't take credit for this saying, but Warren Buffett said, options are like weapons of mass destruction. When you get it wrong, they can be absolutely brutal because they're leveraged, right? They're 100 times leveraged. You can lose a lot of money with options buying contracts. You can also lose a lot of money writing contracts. So there's no free lunch in the markets. But when you can utilize options correctly, both buying and writing, and when you use proper discipline and risk management, there's nothing like it to supercharge your returns, okay? You have to know how to do it though, and you have to have the capital, right? So when Mike said I'm using power tools, pretty much I'm supercharging, I'm essentially doing what someone else may be doing by hand, but I'm doing it that much faster and more efficiently, right? That's the beauty of options. And also one key tidbit, when Warren Buffett said options are like weapons of mass destruction, do you guys know the largest option buyer in history? or option writer in history?
Probably Buffett.
Yes.
Yep.
A lot of people don't know that, right? So when he says, Warren Buffett has a lot of axioms, a lot of quotes, but you have to be careful because for the majority, he's right. What options are like weapons of mass destruction for majority that don't know how to use it. They're extremely dangerous. But for in the hands of Warren Buffett, in the hands of myself, in the hands of other experienced traders, portfolio managers, there's no way to go back without options now. Once I've done options, once I've mastered options, once I utilize it in my positions, in my trading, there's no way now I can trade without options. I use options, I use stocks, combination, how I use fundamentals and technicals, how I use mean reversion and trend following. If you notice, Mike, one last thing, I think everything is about combining. I've combined in my entire life, fundamentals, technicals, combined momentum and mean reversion, combined now, more recently, over the last couple of years, stocks and options. I've combined buying options and writing options.
I love it. I love it. Yeah, like it's all part of one big tapestry. It's not like a silo here, a silo there. Like, so
absolutely. It's combining and bringing and melding together these things that make it such a powerhouse and such an amazing thing, because I'm always learning something new. I'm always bringing new things in. And only once I've mastered the previous one, right? I'm still learning, but it's important to keep on developing, right? And when you do this for as long as I have, I mean, I've been doing this since I was 16, 17. I'm 28 now. So it's been 11 to 12 years. And that's my entire adult life. Think about that. My entire adult life, I've been doing this. So I have to do something to kind of change things up. Otherwise I'm just stagnating. And for me, that's unacceptable.
Yeah, man. I'll just say, because you made me think of it. So the first time that I heard Kramer, because we mentioned him earlier, was on the radio. I was 15. I think you were 5.
Yeah, that's right.
Yeah, man, I'm freaking old. But anyway, let's get to some questions that people have. I'm looking at the first question from Greg. What would you recommend, or what strategy would you apply to grow a small account of 10 grand?
Right. So great question. I'm going to assume small account is like, let's say $10,000. In that example, you have a few options there for you. Okay. No pun intended. You can buy stocks. Obviously you can short stocks. Okay. We're assuming you have access to margin. And the last thing is you can use options. In your case, you don't even write options at all. I'll just tell you right now, don't write options. Buying options, whether it's call or puts, done strategically, not simply going out there and chasing a hype stock, but making sure that you're not paying too much for any one contract, making sure that you know that if you have a $10,000 account and you buy an options contract and it costs $200, okay, for one contract, what is that in terms of percentage risk, right? That's 2%, right? So make sure you're aware of the risk. If you utilize them correctly, a mix of going long, buying stocks, going short, shorting stocks, and buying calls or puts, depending on the situation. If you utilize those 3, that's the best way of supercharging your account.
Well said. From anonymous attendee, know thyself, Michael Jackson, man in the mirror. Take the log out of your eye first before you can take the speck out of your brother's eye.
Yeah, no idea.
It just makes sense.
Yeah, sure.
From Adarsh, can you recommend any books on level 2 in time and sales?
So I'll be honest here. I haven't read, obviously I'm aware of level 2, time and sales, depth of market, order book, order flow is important. This is more so for day trading. This is more for very short time frames. For me, do I look at this stuff often? No. Have I read books on time and sales, level 2? No, I haven't read any books. So unfortunately, I can't in good conscience recommend any. I'm sure there's many out there. Personally, not something I've read.
Yeah, I've heard a lot about like this level 2 and all that stuff. Like I've just never used it myself either. A lot, like from growing up with O'Neill and Darvis and Livermore, none of those guys were using level 2, so it just hasn't been a thing on my radar. Like,
Yeah, same. Likewise, like I'm aware of it. One of my traders uses it. That's a day trader. For me, not something I need for the style of trading that I do.
I think that's an important point too. Like, so it's like, you don't need like every single thing. It's a matter of figuring out like, well, what's your strategy going to be? Like, who are you going to model, right? Because none of us need to figure out how to rub two sticks together to make fire. It's already been done. So yeah, like figure out who you're going to model, and then like figure out what you're going to have within your systems. You don't need to have necessarily everything, and you could like a big thing that I see newer traders make mistake of, and I did this too, is trying to do too many things where like now all of a sudden like you have like 20 different indicators on the screen, and like you're getting mixed signals and stuff like that.
Yeah, absolutely. More is not better. In trading, in markets, people realize this really fast. More is not better. More indicators isn't better. Trading more stocks is not better. Trading more is not better. This is the beauty of the market. Spending 8 hours a day in front of the computer looking at charts is not necessarily better than 2 hours a day. So understanding what suits you, think of it like you being a journeyman. You're going to some far off land to discover things. You're not going to take pots and pans with you. You're not going to take, you know, a fidget spinner or something like that. Like, you're going to take what's essential, right? Take what you need on your journey. It could be tools. It could be things that you need to sustain yourself, food, water, drink. You'd be stupid to bring an Xbox controller when in place you could bring a meal, you know, like a small meal. So think about these things and think about them critically, and be very critical in this day and age, guys, of people trying to sell you on things that don't need to be used, or they're just trying to bait you into like some kind of product or service that you don't necessarily need. Okay, I'm not going to go into details because that's like another webinar to itself. But yes, Mike, you said it perfectly. You use what you need to bring down your strategy. I give my students what I think they need, but I tell them you have the liberty to experiment. You have the liberty to move in and out of these indicators. I have my methods. Like, Mike, your chart looks very different to mine, and that's fine, right? You have different indicators on there. You may have relative strength. You have the moving averages. Your moving averages or levels are different to mine. That's fine because it works for you. And I'm hoping, obviously, I know you, so you know, you and I both know there's some method to it. There's some strategy and method. Don't use like a 103-day moving average just because you want to be edgy. Don't use like a 232-day moving average just because you want to be cool and be different. Okay, use things that make sense. Use them with the purpose. Don't use them at all. Right?
Right, and don't bring a fidget spinner to a bear fight.
Yeah, precisely.
Oh man, yo, I want to thank you so much for your time, man. Like you gave us so much value here. Like it's insane. You worked some overtime. Like,
it's pleasure. I love these. I realize in doing what I do and being more out there, because I've been doing this for 12 years, right? And only in the last 4 years have I been more outside of the shadows, right? Before I was operating the shadows, then people didn't know my name. People didn't know me. People hadn't even seen my face. I've been more, I would say, outside and outgoing. And what I love, and I've realized this over the last couple of years, is I love interacting with people. I love talking markets. I love learning. I love helping. So for me, it's a pleasure to be on, to speak with you, with guys like you in the industry who are genuine, who are legit, who are great. So I always support, I always do the best I can for you, for your followers, for your members, whatever the case is. So the honor is mine.
yeah, thank you, man. I really appreciate all that. Yeah, well, like I'm looking forward to hopefully getting together at some point. Well, like later this year, like I'm doing a conference in Amsterdam.
Okay.
Like I'm sure that there'll be like other conferences where we'll get like. Are you going to that?
Absolutely. I'm not going to that, but that sounds very cool. One of my traders is in Amsterdam, well, close to Amsterdam, but he's in Netherlands. But that's super cool. I mean, I would love to at some point, if we meet up, whether it's in a conference or something like that we put together, absolutely something we can hit up. Or if you need, anytime you want me back on, just shoot me a message. I'd be glad to accommodate.
Awesome, man. 100%. Love having you on. Big friend of the show. Appreciate you. Appreciate everybody that joined us today. Thank you so much for being here. And yeah, that's it.
Thanks.
Peace out, my friend.
Yeah.